Good morning. It is almost 11 UTC here on the 23rd, day before Christmas Eve. So, going through Bitcoin a little bit from last week to today, just giving a bit of an update. First thing I want to mention was options are unlocking on the 27th. That's on Friday. I think across the board, I've seen notional value. Effectively, open interest is pretty massive. Total open interest 337,000 calls and puts on Deribit alone. Specifically, I've seen figures about $20 billion, a little bit here and there. Either way, currently the majority is out of the money for those options. So regardless, I think on the 27th at 08 UTC, when the options actually unlock, you're going to see some market volatility. That being said, New York Stock Exchange is closed the 25th. It's got short hours tomorrow, so it's an early close on the 24th. Looking at the long short ratios for Bitcoin specifically, we're back above 61%. So the majority is pressing the green button as we've been going down. The big thing we want to see now is the last 2 hours, we're seeing a little bit of an increase in shorts, which is good. I would like to see a pretty aggressive attempt to short from the rest of the retail market in general, which should put us up in the potential of regaining levels because there is some high leverage liquidity above us. So with that being said, looking at the funding rates, neutral bullish, 0.01 at max, which is good. OKX showing negative rates. In general, it looks pretty decent. It's below 0.01, still incentive effectively to go short, but it's a lot easier to press the green button for large market makers. But remember, priority still down. And then on the heat map itself for liquidity, we've done the major flushes out from yesterday to today. We've got liquidity stacking on both sides and really thin liquidity from about 88K down to about 85, 86. So this is good for a couple reasons. I think we're getting close to the local bottom. It's either in right now where we do one last little flush sub 90K to really panic people, get into that, dead liquidity zone until we start seeing any potential for reversals. Now, that being said, all we really need to do to regain priority back up is getting back above 98K, 98.4, that type of stuff, to start opening up some of that leverage short liquidity above us. In all reality, a lot of the lower leverage shorts are still existing above us. So as we flag out and create this structure, the higher time frame still looks good with liquidity stacking above us. So looking specifically at Bitcoin on the chart, so the weekly close was bad. It wasn't at all what we wanted to see, but it wasn't terrible. It was, not great, not terrible. The close above this 97.2 was kind of like the weekly bullish engulfing candle that led us to this high structure. We've now failed that, bearishly retested it poorly and gone lower. We're still stuck currently between the resistance of the December open at 96.5K and the weekly open, which is down here at 95.1. So nice tight little range that we're holding into currently. And we want to get back above this stuff. The big thing here that would start to change price action is any high that creates a high off of that 99.4K wick from Saturday and then create a higher low. That's what we'd want to see to start forming out some type of upside structure. That being said, there's still a big demand zone below us. I think if we start losing the weekly open now, I'd want to see one last flush followed by a very strong buyback. I think that's the most bullish structure we can get because then we're pretty much guaranteed a retest back up into previous weekly open at 104.5, potentially to 106. So the deeper, more painful this thing looks, the better it is for us because it gets retail terrified, panic, thinking it's going to go lower. And sometimes pain is a good motivating tool for quite a bit of the retail market, which is primarily still long. But again, they've been shorting here aggressively in the local structure just because we're regaining a little bit of the levels we've gone down to. So what I want to see here overall to change is kind of downside priority because that's what it is. We broke it from the previous weekly open failure on Wednesday. We did a really nasty retest on Thursday. And then Friday was just the continuation of that nuke, especially given, Powell's speech, which was hawkish from last week, cutting the number of rate cuts going into 2025. So what we want to see here is very clear. If we're going to hold that low, that's fine. We then need to create a higher high off of that high. Once we do this, any higher low you're looking to buy to go higher, right? If we don't hold the low that we're currently doing, this higher low structure here, and we lose this low, likely we go down towards 90K, potentially sub 90 to retest levels. And that buyback has to be aggressive. We need to see some effectively V bottoming structure if we do one more leg down. I think anything below 80K is unlikely right now. The big thing that we want to see on the higher time frame is we can't really even wick underneath this structure, like 87. There is some long liquidity there as we saw, but it gets really thin under 88K. It's really thin and like almost unattractive. If we do happen to break this low, we're going to free fall and capitulate down to about 76K. That's the expectation. And if we do that, we're farming out a much larger, higher time frame price action structure than when I arguably think we should, given the bull market conditions that we're still technically in. So any close that regains 106K, 4-hour daily, I think we just rip to the upside. I think also that if we do happen to, flag out some structure, since it is Christmas and lower volume trading this week, I'd want to just flag out some type of structure that's arguably the best, allow the big liquidity to the upside to build back, while at the same time not losing new lows and creating that continued priority down. So for the time being, we're looking optimistic in the local move. We want to see some nice regains of levels, take out a high, and then we can talk about, low, higher low, higher high, and then we start talking about building some structure back. Until then, you do have downside priority, play it as such, but don't get caught off on it, especially since it's a lower volume trading week. And again, coming up on, Friday, we have those big options unlocked. So take it easy, play the price action as it comes out. Yeah, the freebie from last week, the free shorts I think are done. We got that free short from the previous weekly open failure. That was the cleanest I've seen in a long time. But beyond that, it looks fine. At the end of the day, the higher time frame is still looking up and good. It's a real shakeout, which is probably overdue. So with that being said, take it easy. Catch you later.